The battle for the 50-day rages on as we await the Fed next week. Let's talk about it on the Weekend Update. Okay, friends, let's talk about the market. Here's what you need to know. First up, here's the market the way we've always been looking at it. Red line is the S&P 500. This yellow color is the 50-day moving average. And purple down here is the 200-day moving average. And I'm pleased to report from last week's market review, we absolutely turned on a dime. We're above our 50-day. And really the battle of the 50-day keeps going here. If you'll remember, maybe about 2 weeks ago when it looked like we were going to break out, I said, hey, I want to see us get above the previous all-time high before we get the all clear. That didn't happen, so I'm not surprised we had another stumble below the 50-day. Last week when we talked about the market, I said, hey, the market needs to turn around basically on Monday to keep this test at the 50-day alive and prevent a test on the 200-day. I'm very happy to report that that has happened, but really this looks like to me we're in a holding pattern, right? The market is here, and I think what we're awaiting is the Fed next week. So biggest piece of news, I don't expect us to exit the holding pattern before the Fed speaks, but on Wednesday, I misspoke in the last video. I said it was the 20th. It's actually the 18th, so Wednesday. The Fed is expected to give their rate cut. And right now, the discussion in the market is, are we going to see a 1/4 point cut or are we going to see a 1/2 point cut? And there's all sorts of discussion on either side about, the pros and cons. For me, what I would like to see, I'm very attuned to the economic weakness. If you caught the last video, then you know that. I would prefer a 1/2 point cut here. In much the same way, when we raise rates, there's long and variable lags before it starts to kick in. I think that goes doubly so for cutting rates. I think it's going to take a little while for consumers to realize, oh, hey, I can get the financing. The things that I wanted to buy that I didn't because it was too expensive. I think it's going to take a little while to bring them back to the market. So I'd prefer a bigger cut. If we don't get one, I think it's okay. I mean, the economy is still holding together here. We're in a little bit of a slowdown, but normal in terms of seasonality. And one other thing I'll say, since we've had a little bit of a dour sort of mood on the channel these last couple of weeks as we go through this process, this is a normal, natural process. I'm not worried about anything in the market here. And just remember that long-term, things look really great, right? Every day, 7 billion, 8 billion people wake up and try to make the world a better place. And so we know that there's going to be new technology, better businesses, better ways of doing things. So even though we're going through this period and we're examining it in excruciating detail, don't let that shake you out of your positive vibes for how good the future is going to be, how good the market's going to be, and how good, everything's going to be once we get through this little spot in time. So there you go. Whole world is holding its breath for the Fed. We'll see what happens here. We're still in our 50-day test. What I want to see, if we can get a lift above our previous all-time high, that would give me the all clear, and we just might get it next week. I'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.